This is the briefing for Friday, June 21st. Really, the precarious position that the indices are in right now is just very, very interesting. We didn't get a whole lot of movement in today's trading, just a little bit of a gap down. This is the spiders on a 60-minute basis, and then rotation for the rest of the day. Same thing with the Qs, and about the same thing with the Russell and the IWM. But as I've been talking about for the past week or 2 weeks, the internals of this market are not strengthening. The internals are continuing to deteriorate, which basically tells us that price is holding up, but that's probably a result of the higher weighted stocks that are holding the indices up. And we've known from the past that if the majority of stocks are beginning to trade lower as opposed to higher, and the higher weighted stocks are holding things up, that at some point in time they give way and eventually we see a price correction. Now, we've got a correction, a short-term correction. You can see this 2 days of correction here, 2 days of correction here. And basically the Russell is diverging from an intermarket perspective. So we have internal divergences, which I'll get to in just a minute. They show up better on the daily chart. But we also have intermarket divergences. Now you can see what's happening here. This is the spiders representing the S&P 500 and the Qs representing the NASDAQ, and the Russell represented, or I should say the IWM representing the Russell. So you can see the intermarket divergence between these three. I'm going to switch now to a chart of the Dow Industrials and the Dow Transports. Here's the Industrials represented by the diamonds, and the Dow Transports represented by the IYT. Now you can see that this is pretty similar to the chart of the Russell, as you can see here. So basically what this is telling me is that in the past it has been a high probability that when the Russell and the transports begin to diverge and begin to trade lower, when the other indices are holding their highs or continuing to move higher, that they will weigh on the S&Ps and the NASDAQ, and eventually we'll see some type of a rotation back to the downside. Now, what's important here is it's impossible to predict. I shouldn't say that. I should say it's possible to predict the direction of a move if we're breaking out to the upside, because the trend in price is to the upside. So basically, if the internals were strengthening, if we did not have a intermarket divergence, that would suggest then that potentially when we get a breakout, that this was a correction and we get a breakout above today's high, that we're going to be off to new highs and a new trend, a new uptrend is intact. But we don't have that. We have divergences in the internals. We have intermarket divergences. So in a strong trend, all stocks benefit. Not all, I shouldn't say, but most stocks benefit from that trend. And basically what we're seeing now is we're seeing a beginning of a decline in the majority of stocks, and higher weighted stocks are holding the market up at this point in time. Now, looking at a daily chart, you can see, look at volume in the spiders. I mean, it is just really, really slow, below what would be normal average low volume for the spiders. Look at breadth. Breadth is declining as price is increasing. That is unsustainable. Now, it is being carried by higher weighted stocks. But on the other hand, at some point in time, the majority of stocks will even weigh on the higher weighted stocks, and we'll see some type of a correction. Look at the Qs. Low volume, breadth divergence, same thing as price continues to move higher. Now the Russell is diverging from an intermarket perspective. It's rotating around this 200 level. That's a very, very important level for the Russell. If we were to break much below that and close below it, I think it would signal the potential that we're in the process of seeing some type of correction. Now, as we talk about corrections, I want to go back to the 60-minute charts. Support and resistance are extremely important, and support and resistance in multiple time frames is extremely important, because if we break short-term support or resistance, then that's going to suggest that we're going to test intermediate term support and resistance. If that is broken, then it suggests we're in a longer term move that could be a significant move. And as traders and investors, we certainly want to be on the side of the greater degree move and not just simply the short-term moves. So support and resistance, short-term support and resistance is always the previous day's high or the previous day's low. So looking for a long position above today's high would suggest then the potential to test this high at 550. Trading below today's low is going to suggest suggest the potential to trade down to the 540 level. Breaking that level would then suggest a test of 525, which is a longer term support level, and breaking that then would suggest a longer term downtrend move was in the process of developing. Now, that's the way I look at the market. That's the way I try to anticipate what degree of trend that we're in and whether that degree of trend is getting ready to change one way or the other. Now, it's important to look at also the internal divergences that are occurring, which I just talked about in terms of the industrials and the transports and the Russell. Now, looking at where we are in terms of overbought and oversold, we're neutral. So this basically gives us, or I should say, gives the market the opportunity to move in either direction without reaching an extreme overbought or extreme oversold condition. But here now is the crux of the matter. This is a chart of the percentage of stocks in the S&P 500 that are above their 50-day moving average, and this is the percentage of stocks above the 200-day moving average. This is basically screaming at us that the internals of the market are declining, that the majority of stocks are already trading below their 50-day moving average. And look at what's happening with the 200-day moving average. So we have a lot of stocks within the S&P 500 that are beginning to trade below their 200-day moving average. This is the NASDAQ. Look what's happening here as price moves higher. So this is just another situation that's telling us that the market is declining from an internal perspective, and it is not strengthening, it is weakening, and it's just a matter of time before that will begin to weigh on price. Now, it is always the higher probability that the internals will, or I should say price will correct to the internals. But there is also a smaller probability that the internals will correct to support price. So we have to keep that in mind. And until we see some of the short-term or intermediate-term support and resistance levels broken, then we have to be leaning towards the fact that we may be in the process of an early correction, or if we get a news event that changes the perception of value, then the internals will correct to support price, and we'll see another move back to the upside. This is the Russell below the 50-day moving average, and this is the 200-day moving average. So you can see the deterioration that's occurring within the indices themselves. So now, looking at where we are in terms of the longer term, we know that the internals are declining. We know that there's intermarket divergences, that the transports and the Russell are already in a correction mode, at least in a short-term time frame. So what we now have to look for is what happens on Monday between today's high and low. That's going to open up potentially a move to 550 or down to 540. Same thing with the Qs. It's going to open up a potential test up to the recent highs, or a break is going to open up potential tests down to the 471 area. And then, of course, the Russell trade, this 200 level is just extremely important in the Russell. If the Russell breaks below 200, and if it holds below 200, that's going to then suggest, I think, that we're going to see the beginnings of some type of correction. The degree of time and price is yet to be determined by the degree of support levels that hold or are broken, and the same thing with the potential for a strengthening internally, and the degree of strength to the degree of price appreciation that we could see. But right now, the market is screaming that it is weak from an internal perspective, and the intermarket divergences are just very concerning, at least at this point in time. I'll pick this back up again on Monday for subscribers. Hopefully, I mean, this is just a tough day to try and trade. It was option expiration Friday. That might have had a lot to do with it, but certainly just a low range day today was just a very, very difficult day to try to determine which direction we were going to go. Have a great weekend, and I'll pick this back up on Monday.